Hey guys, I'm Big Mike, and like always, I'd like to thank you for being here today. Today we welcome back Suri Duddella. He's been here multiple times in the past and is always a great presenter with a wealth of information. This time his webinar is going to focus on the success and failure of chart patterns. Chart patterns are definitely something that Suri knows a lot about. He's the author of a book called Trade Chart Patterns Like a Pro, and we'll be giving away 5 autographed copies of that book at the end of the webinar. If you want to win one of those, then pay close attention to what Suri has to say, because there's going to be some quiz questions at the end, and the content that Suri covers today will give you the answers to those questions. The webinar is being recorded like always. I'll post the recording on YouTube sometime tomorrow. If you're watching the recording at a later date and you like what you see, please do us a favor and give it a thumbs up. It does help us out. Suri has asked that we hold the questions until the end of the presentation, so let's let him do the prezi that he has today, and then when he's finished, we'll open it up for questions. All right. With that, let me turn things over to Suri and we'll get started. Okay, Suri, you should have the option to share your screen.
Okay, fantastic. I'm just going to go ahead and show my screen. And I'm just going to present it from the full screen. Mike, can you see my screen okay? And can you hear me okay?
Yep, looks good, sounds good. Thanks, Suri.
Okay, fantastic. Thank you, Mike. Thank you for inviting me again for BMT. I believe this is my 5th or 6th presentation, if not more. But I've been coming and presenting it for Mike's audience for the past few years. I really enjoy it. Today I brought in a pretty this is one of my current research. I've been working on it for the success and the failure side of the trading chart patterns. And I brought in a pretty good presentation, which is about 120 slides, but it's actually some of them maybe like within like few seconds. So I plan to finish the entire presentation probably between 60 to 75 minutes. And so the entire presentation is what you're seeing. It is just on this screen. So actually this is Prezi, so we'll be transitioning into this. And this is designed as the Fibonacci vortex, and so you'll be seeing this, how it works inside. I'm sure some of you already know my name is Suri Duddella. I'm an author of Trade Chart Patterns Like the Pros, and it's been released some time ago. I'm actually going to show you today my new book, which is going to be released by the end of the year. So I'll show you just a brief concept of what I'm working on it. So with that, let me go ahead and start my presentation. So the first is the success and failure. As a trader, we are always, fighting between the success and failure of our trades. We always come to a point in the trading, we make a trade, and, based on whatever knowledge or whatever setup we have, good timing, it could end up in a success or failure. Well, the graphic here is kind of important. What I wanted to show you is, because if you are a pattern trader, and if you know ahead of it, where a failure point occurs, then you can actually take an advantage of it. Whereas in many other forms of trading, a failure really ends up as a failure. But whereas in patterns, you can actually, if you know that, there is this point where it's going to fail, then you can take advantage of it and you can actually reverse that position, and then you can trade according to it. So this, I thought that it's a cute graphic, and I thought that I'll show it to you guys. So before that, I wanted to go ahead and show you my agenda. The agenda is actually the concept behind this entire presentation is I wanted to show you a platform which I'm kind of working on. It's kind of a framework where I put together a pattern analysis, and then I put together different patterns, and then I actually looked at patterns from a different perspective of it to see whether the pattern is successful or failure. So I'm going to present that side of the pattern, and this is, of course, I use the trade session to build it. So in order to present that results of it, what my success and failure ratios of each and every pattern, what I thought I would do is I would give you just briefly about the patterns and how they work, and then I'll show you what type of components I used it in order to test it. And the next is I'll show you what are the success and failure ratios of it in my grand scheme of it, I wanted to test every single pattern there, but in this particular presentation, my focus is harmonic patterns, so I'm going to talk from the harmonic patterns and what I found it so far. Then I'll show you plenty of examples in the patterns, and then we will have a quiz, and then followed by a question and answer session, and I'll answer all of your questions too. So first, let me show you what I'm talking about, the platform. This is the TradeStation chart where you can pull up any kind of a symbol, and then it pulls up a pattern. For example, in this case, it's a bullish butterfly. This is the GLD chart. It's actually in the beginning of the year, and that's the chart. And then what it does is on the right-hand side, it will show you briefly, the basic fundamental stuff, what's happening with this GLD itself. And then it actually brings up, this is completely automated analysis. Then it talks about its pattern analysis, and then it shows you the trend analysis, from the long-term and the medium-term and short-term perspectives of it. And then it shows you what are the general pattern statistics. I went and did this pattern stats, and that's what I presented in the presentation. But in this, it also shows you that. So you can actually just quickly read about the pattern analysis for every pattern, whatever symbol you can remove it. And then on the top of it, it also shows you something called a pattern ranks. And this is actually the center of the presentation. Basically, these are the components I used it to determine this kind of a pattern ranking. There's a location ranking, there's a trend ranking, symmetry, and I rate is integrity rate, and what is it, combined rate. So I'll actually talk about these type of things in the presentation. So that's how the presentation is. And before I actually, finish my presentation, I wanted to show you these are some of the highest success and failure ratios for some of these patterns. For example, the bullish side for is a 0.72, which is I found it to be the highest success ratio so far. And then there's a bearish crab and ABCs and all. We'll come back and address it, what is the SF ratio and what are the patterns. So before that, I wanted to actually start going and showing you my presentation. So and that's my agenda. So before I start this presentation, I want you to give you some disclaimer. I'm not an investment advisor. I'm purely a trader, and all the information I'm presenting it today is for education purposes only. And all the material I'm presenting it today is copyright protected, so please do respect the copyright law. And also, entire of this presentation is recorded, as Mike said. So he's going to post that probably today or tomorrow. So you'll have the entire access of this presentation itself. So you don't need to record it or copy it. So the next is just briefly about myself. I've been trading for the past 18 years full-time, and I trade stocks and options and futures. Futures purely from the E-mini, and stocks and options I purely traded from a swing trading perspective, and then whereas futures I traded intraday. I've been using TradeStation as my primary platform for the past 14 years. Probably if not, at least last 12, if not all 14 years, I'm doing purely a patterns research. I'm purely a patterns trader. I have an education which, with the quantitative and mathematical skills, and so I do have a lot of programming skills. That's the reason I program all this for myself. And I also publish a lot of articles, over 30 articles in the various magazines in the last few years. I've done a lot of presentations, and also I'm pretty sure you probably heard of my book. My book is a trade chart patterns like the pros, and also the book is translated into German too. And if you are a TradeStation Forum member, my ID is Demicron. If you're following me on Twitter or Stock Tricks, my ID is Suri Notes is my ID. So the first what I thought I would show you is this is my blueprint, but I believe this is the blueprint for any traders. And in this case, I am actually, because I trade patterns, but in the center you can actually replace the patterns with anything, any type of a methodology you may be following it. So this is a strong blueprint which I came out with. What I call it I trade patterns, and patterns basically it has two different set of categories. One is you need to work about the context side of it, and then also from the execution side of it. But before that, for any trader to really succeed you need 6 different categories. You must follow it. The first one is the is what I call it a trade plan. You must have a trade plan, and I'm pretty sure all of you have it. If I had to tell a small kid, what my trade plan is, I tell them that I trade patterns, and I follow trends, and I stick to my rules, and that's my basic trade plans in 3 sentences. And then of course I have a very elaborate plan, which is probably like 6 to 8 pages of it. I read them time to time and I go and update them, but you must have a trade plan for any type of a trading success. The second is, for me, I use patterns. So you must have a strong methodology and probably an accurate method of recognizing the patterns. So second category, what I call is a pattern recognition. Pattern recognition, is not a simple thing. It's actually a very difficult process for a lot of people. Some people do visually, and that's the reason actually they make a lot of mistakes. I do completely automated pattern detection of most of the patterns, in fact. And then the second is the validity of the patterns. Some patterns, are only valid at certain conditions, and some patterns are only tradable in certain conditions, and some patterns you need to be accurately measured. So that's the reason the validity is the next step in the success part of this trading plan. And the next is the market context. Market context is, actually in my book, market context is probably a lot more important than the detection itself. The market context is some type of the current market conditions every trader uses. It's like you may be using pivots, or you may be using moving averages, or even times, like whether you trade in the morning or whether you trade in the afternoon, or how the market reacts to certain type of time zones. So that's all is part of a market context. So you must have a certain type of a strong market context already built up into your methodology. The next is the execution. Execution is, it's a kind of a how do you execute it, and what type of a size you use it in your trading, and what type of platform you use it, and the ordering, what type of orders you use it. That's all is part of the execution. And the next is the management. Management is one of the most important part of it. This is like quite a bit, a lot of people actually miss it. You must, clearly manage your order management and also risk management. And then the last one is the money management. How do you manage, when do you add to the positions and when do you exit out of the positions. So this is all as part of, it all has to be part of every trader's blueprint. So that's what I call it, is these 6 are the very important categories of everybody's blueprint. So now let's get into the basics of the patterns research, what I use it in the basics. In fact, I've done this type of presentations many times on the BMT. In fact, most of them are recorded. You could go back and read some of them, but here I put together in a little bit of different form. And also I'll be jumping over a few of them because I think some of them may kind of repeat. One of the best thing about the patterns is pattern trading is what I consider it's the most objective way of making the trading decisions, and that's the reason I consider pattern trading is much more superior than any forms of trading. Patterns, because they actually show you a geometric form. Let's say suppose a triangle or a rectangle channels. They actually have a very structured way of a pattern structure. So once the structure is formed, it's not going to change. So because of that reason, it actually provides you a structured way of measuring the distances and measuring the times for you to trade it. And then they have a very definitive or a very specific way where you enter, where you put your stops, and where you exit. And then one of the greatest advantages with the patterns is that patterns are repeatable, and they repeat at quite a bit, known frequencies. And because of that reason, that's the reason I think the patterns are very superior trading. But also in my book, patterns are also in just the pattern trading itself, without any other tools, without any other support tools. I think pattern trading is just a mediocre forecasting tools. They're not the greatest tools to forecast the market by themselves. So that's the reason we need to add other type of market context tools to support the patterns. And then from there, once you find the best kind of an optimized and perfect form of patterns, then you can use that type of tools to actually forecast it. But by themselves, like if you take a rectangle or a head and shoulders or anything, they're not a greatest tool to forecast any market. The next is pattern trading is kind of a mastering, is kind of a complex, because a lot of people juicy, kind of a math and, some kind of a geometry, and that's the reason they get, kind of a little bit taken back. But so that's the reason mastering is complex, and also it's a pretty lengthy process for anybody to master it. It's not like looking at an MACD crossover or RSA crossover, because you can just see that, one time it happens, and then you can think that, you can somehow master it. But in the patterns, there's a lot more which goes on. And because of that reason, I think this is the basics, pros and cons about the patterns. So the next is what I wanted to show you is within the chart patterns, I wrote a book about 65 patterns, but there is only, I would think there's about 40 of them are very distinct and unique patterns. Distinct and unique means, let's just suppose if you're looking at channels, the channels, you could probably look at a symmetric triangle or a symmetric or a ascending or a descending triangles. They are all probably similar type of a logic behind it, but so I won't call them completely distinct, like 3 different patterns. I would probably call them as a single pattern. That's what I call it, the distinct pattern. And then the next is within the patterns, there's a continuous patterns and there are reversal patterns, and I talked about this extensively in my book and also elsewhere in my presentations if you guys wanted to look at them. And then what I did here is I actually categorized patterns into 4 different type of categories, and that's what I've presented. The first one is the first category of the patterns are the bar patterns. Bar patterns are primarily like a 1 to 3 bar based patterns. These are like most of the candlestick patterns are based on like a bar patterns. There's a doji or there's some type of a pipe patterns, or those are all like 1 or 2 candlesticks, 1 or 2 bar patterns. So all the 7 of them, what I showed it here, are pretty much like bar patterns. So the ones which are kind of highlighted are my favorite patterns to trade it. Market structures or gaps is something which are my favorite, so kind of highlighted them. And then the next category is the arc patterns. Arc patterns is, there's some kind of a curvature built into a pattern. For example, cup and handle, has some type of a curvature, like a saucers or, parabolic arcs or something like that. This particular category is not my favorite. I think only thing is I have coded probably most of them, but I think I would say that parabolic arc is the one which I pay more attention to. The next category is called channels. The channels are the one which I just talked about. These are all like, anything like a double bottoms and double tops and, V bottoms or a head and shoulders. So all of them are actually part of some kind of a geometry structures, but they all belong to a single type of channel called the channels. And channels is where the support and resistances are, like, it bounces off of the support and then it actually, reverses from these resistance levels. So that's what is, and that's how the patterns are. These are all the patterns formed within some kind of a channel structures. The next category, what I call is actually my favorite, which is called the harmonic patterns. It's also a little bit complex. And this is where we will see these Gartleys and butterflies and ABC patterns and that type of patterns. And they're all based on the harmonic and Fibonacci ratios. Now let's just present briefly about what is a geometric and harmonic patterns, and I'm sure this is written, presented many times by me and many people on the web. You can figure it out, what is the harmonic ratios or anything like that, but I thought I'll just give you just a brief information. And here I have a basics of harmonic patterns. This is just, it used to be like 4 or 5 slides, but I just said that I'll only present it one. Here there's quite a bit of fib ratios and fib numbers. We have it, and then we also have retracements and extensions. When a pattern, when a price actually retraces into the previous leg, and that's becomes a retracement pattern, and when it goes beyond its its previous leg, then it becomes an extension. And this is some kind of a basics of the harmonic patterns, and I'm sure you guys can read it in many places on the web. So some of the examples of the geometric patterns are ABCs and Gartleys and even double tops and double bottoms, and I consider it as they are geometric structures, and you can also use some type of harmonic ratios to detect them. Head and shoulders is one of my favorite too. So the next is what I wanted to present is the ABC pattern, and this is one of my bread and butter pattern. In fact, 70 to 75% of my trading is done on a single pattern, and this pattern is probably most universal, and it actually exists It's part of many other patterns. And I have done ABC presentations quite a few times on BMT. So you guys can actually go back and take a look at that. So the way how I look at ABCs are, charts are always in an ABC pattern structure, whether it's a bullish or a bearish structure. So if you look at this particular graphic, you will see every one of them has an ABC kind of a structure. And these are like if you look at on the left side, it's an X5, it's like, some type of a butterfly patterns or a head and shoulder patterns or a channels or a megaphones. All of them have ABC type of structures. So charts are always in ABCs, and then they are also part of Elliott waves. So some of the examples are Gartleys and butterflies, head and shoulders, channels, even wolf waves and all. So I've been writing these ABCs for the past 8 years, and it's one of the best algorithm I've ever written, and I think that's the reason I spend a lot of time actually building and actually detecting the ABCs and trading them. So here is an example of an ABC pattern where the blue, the chart, the pattern which is drawn in blue, and that's an ABC which is automatically detected. And not only I detect this pattern, I also show where the entries and stop levels are and where the target levels are plotted on the vertical axis. And now I also have the time predictions too. So that's how actually ABCs look like. And I have a lot more charts to show you. This is an ABC bullish pattern. This is again detected automatically. And here is another one which is an ABC bearish pattern, and that's how it looks here too. So now let's go and actually look at some of the examples of what I'm talking about, how ABCs are part of the structures. So if you look at it, this is the Gartley and all our X5 patterns. X5 being it's like the 5-point pattern, so I call them 5 points. And in that you can see there's every one of them has an ABC embedded into that pattern. So you can spot it on the left side. There's a bullish butterfly pattern, and there is a bearish ABC pattern exists in there, and all of them have it a similar way. So I just wanted to give you just a quick glance of all these patterns and head and shoulders, and you can spot the ABCs right here too, and these are also completely automatically plotted. The next is the triangles and wedges, and these are also have quite a bit of these ABC structures. So once you perfect a way of treating ABC patterns, then you know how to treat all these patterns, and that's the beauty of the ABCs itself. And the next is this is I just wanted to show you just these are all part of it. This is the tops and bottoms, this is double tops and dragons. So again, I use this ABC logic to detect these patterns. The bottom two are actually called dragon patterns, dragon bullish and bearish. And I've written about dragons in my book also. So the idea is what I'm trying to do is I'm trying to build all these patterns, and then I will start showing you how I use what type of pattern components I use it to build some kind of a statistical analysis to determine whether how successful or how what type of failure ratios they have. And that's what I thought that I would just give you a brief idea of these patterns. And here are the channels. And the last one is probably Elliott waves. I do not have any kind of Elliott wave automatic detection, but I do have some kind of like a 3 drives and wolf waves kind of a patterns detections. So that's how this ABCs are based on. That's just the basic premier of it. So the next is actually, this is the most important part of it, is the pattern components. Pattern components is, well, now we know that we have a set of patterns to test them because we wanted to find out what success and failure ratios are. Now I wanted to see what type of components I'm actually interested in measuring it. So then let me actually present that side of it. The first is, for every pattern, based on the size, you could have the smallest size patterns are a pretty large size patterns. So when I'm looking at a pattern, I'm saying that, okay, the first thing I need to do is I need to look at its size. And the size is based on, for me, I know that from my research, the very small patterns, actually fail a lot more than succeed. So because of that reason, I wanted to avoid, this really tiny bit of patterns. And I'll show you a couple of examples of why they fail it. But then I also wanted to have a proper breadth and proper height for every pattern trade it. So that means it actually forces you to be a bit longer term. Instead of trading 30-second charts, you may be trading like a minute charts or a couple of minute charts, and or even if you're a swing trader, you're probably using a daily or a 60-minute kind of charts. So that's what I think I found it to be a lot more success. So in order to get that type of a thing, you actually need to focus on the size of the patterns itself. And then, so let me actually show you a couple of examples here. For example, take a look at it on this chart. This is actually an example which came out of a book presented by someone else. Here is the one in this. The author presents this as a bunch of head and shoulders patterns here in this one. According to my research, none of these are head and shoulder patterns. And none of these, because if you look at it, they're very small and they really don't materialize, and the most of them actually failed if you want to treat these patterns. So that's the reason I don't consider these type of patterns as the head and shoulders patterns at all. And then just because it just looks like a structure, it's not. But whereas here, this is what I call it as the head and shoulders pattern if you're trading on a daily chart. This is the inverse head and shoulders pattern on a checkpoint software. So that's where it has quite a bit of breadth, and it has a pretty good of the size of the pattern, what I call it, the height wise too. And take a look at another one is a bullish butterfly pattern, and this is what it's actually materialized quite well. This is how the patterns are structured. This is actually daily, but you can also plot it in a 1 minute or 5 minutes or a weekly or any type of a chart frames. So the size is very important when you're trading chart patterns. And then this is another one, which is the Goldman Sachs. So one of the other thing which happens in patterns is when I'm detecting the patterns, I have a scale of how I determine these patterns. They go from 3 to 7. So usually I do not find pattern confluencing happening. That means at various sizes, you always probably see different sizes of the pattern. But this particular case, what I found it is at 3, 4, 5, and 7, all of these size levels, I found this pattern, the same single pattern emerging it. And these patterns tend to have a lot more successful when multiple size patterns are showing the same type of pattern structure. So that's what I thought that I'll give you a quick example of it is if you're seeing a lot of confluence of sizes, then the success tend to be a lot more higher. We'll actually see that a lot more too. And then one of the other thing is I do not mix the time frames. So that means I do not look at a daily chart and trade 5-minute charts, or I do not look at a 5-minute chart and trading like 610 tick chart or anything, because when I'm making trading decisions, I'm making trading decisions in that time frame only. I do know what's happening maybe in a higher time frame once in a while, but I really am not really mixing the time frames, and I really do not think this multiple time frame analysis is great, at least for my type of trading. Then the second key factor which I use it when I'm computing the pattern success or failure is the location, because locations are very important, because when we are trading patterns, we do not want to trade bullish patterns in a bearish environment, or bearish patterns in bullish environments. So then I'm interested in looking at the patterns and seeing, where is the pattern forming. So I use a simple indicators like the Fibonacci bands, and then I look at key support pivots to determine whether the pattern is reversing from its extreme locations, or is it actually forming in the middle of the bands. So that's the reason actually location is part of it. So when I compute this success and failure, I'm actually looking at that location ranking too. So here is one of the example is, again, we go back to the same GLD, and this is actually pattern. It's reversing from the extreme lower side of the band. So that means that's where the pattern form, and it's actually reversing from it. So it kind of shows you some type of an exhaustion which happened in the pattern, and then it's reversing from it. So then the next one is this is another one, Philip Morris head and shoulder pattern, and this is also where is the pattern forming, and how is it close. What is its relation to the Fibonacci bands? What is its relation to 200 period moving average? And that's what I'm constantly looking at it. And I have a way to quantify these type of patterns based on their location. So that's what I actually use it into compute these methods. And then this is another example of a bearish crab how it formed. And then also whether they are originating, I have a way of looking at the Fibonacci bands, Fib zone pivots. So especially when I'm trading intraday, I'm constantly looking to see whether the pattern has any type of a confluence with this Fib zone pivots. So let's just suppose if I have a target, for example, if you take at the bottom of it, my target is falling in the Fib zone. So then I know that I can't really fight that target because the price is going to reverse it. So because of that reason, I tend to actually exit those type of targets because I know that there is a resistance which is coming from the Fib zone pivot. So again, as I said, location is very important for the patterns. Here is another example where ABC formed and the C actually reverts from the Globex low position, and that's what I'm showing it at the bottom. There's similar pattern structures I think we talked about it already. The next one is trend strength. The trend strength is, well, I have a way to compute, each pattern trend strength. So not only I'm looking at the pattern strength itself, but I'm also interested what was the trend strength prior to the formation of this pattern. Because if a pattern, prior to formation is actually suggesting that there is going to be a reversal or there's going to be a bullish trend, then that pattern succeeds a lot more than actually if it has a opposite of it, like let's just suppose the prior trend is showing you a bearish trend, and then you know that the pattern probably may fail. So but you have to have some type of a way to quantify this kind of a trend. So I actually take a look at every pattern, then I compute its strength prior to it, and then the trend within, and also trend after the formation of the pattern. Of course, you are already in the trade at that time. So that's what for each pattern is actually varying using what type of a trend strength it has. And the next one is a symmetry. Symmetry is a bit complex to discuss it. It's actually, if you guys are mathematics, if you use mathematics, you probably know what a mirror and behavioral symmetries are. But every pattern has some type of a symmetrical behavior. And that's what I actually measure it. And these are measured between 0 to 1. So when I look at these symmetries, for each pattern, take like a look at the bullish butterfly pattern, let's say. In that, I look at a symmetric ratios which have at least a 0.65 or above type of thing. And those are the ones which I like to use it as symmetry ratios. And this is a mathematical way of calculating this. It's already coded into it, so it tells me what ratios I have. For example, this one, if you look at the bullish Gartley pattern and it's showing me that there is a symmetry rank of a 0.75 and there's a behavioral rank of 0.85. These are the numbers which go automatically into my pattern analysis. So I'll show you a lot more of these. So these are all the examples of what type of patterns this has. And the last of this category, I think let's see, is a clarity and integrity. Clarity and integrity is just to give you a brief of this, what happens is in a pattern, let's just suppose if you have a bullish line, let's say, take an example of an ABC pattern. In the ABC pattern, in the AB leg is supposed to be the bullish line, and so is the CD leg. So in these two legs, we should not be seeing too many of the negative or the bars which are actually closing with a wide range bars or anything like that, because in a bullish trend you must be seeing the patterns which are forming the positive or bullish bars, or you shouldn't be seeing a lot of gap downs in a bullish trend. So that's what I call it, that tells you whether the pattern is a pattern has any integrity or not. So I actually look for that type of integrity rate, and that is again computed, and that's also I look for a 0.65 or above for a pattern to succeed it. So let me show you a quick example of it here. If you look at this ABC pattern here, just look at the first leg, which is an AB leg in the pattern, the first leg. In that, if you look at, and I use the candlesticks to show you, most of the candlesticks in that are upside. That means they're like a bullish, and that's what that's supposed to be. Whereas the BC leg, which is actually a counter trend, and that's supposed to be a bearish trend, if you look at it, most of them are actually negative or a bearish trend. So those are all like a dark candles. And that's what, so that tells me that this pattern is its integrity rate would be probably a lot more than 0.65. And now when the pattern actually triggered it, by looking at this pattern integrity itself. Now you know that this has actually formed a great ABC, and now you can actually enter into this pattern. So there's a way to compute these, the integrity ratios, and then once I compute them, actually bring it into my model of what is the success and failure ratios model. So that's what I thought that I'll show you a quick example there. And here, if you look at it, this is another example of a TFM. This is actually from March. There's a head and shoulder pattern where it's showing you that head and shoulder patterns are reversal patterns, and they're also bearish patterns. In this, it has got a greater integrity because in the legs where it's supposed to be the bearish, it's showing you that there is a great gap downs. And it's when the pattern broke down below the neckline in a massive gap down, that itself is a signal that this pattern is going to materialize. So this is what you need to be looking at the patterns to see whether the pattern is actually has a clarity. You can also use visually to figure it out too. So then of course this is the last one, sorry, is the state of the pattern. State of the pattern is in the very simple terms, whether the pattern is emerging or complete. Because if you look at these patterns, like let's say, here, this pattern it's emerging pattern, and this emerging pattern that means it's not complete. You can't automatically trade these emerging patterns. This pattern is only complete. Head and shoulder patterns are only complete when price closes below the neckline. Until then, you're just still emerging. So when I'm looking at the patterns, I'm also looking at whether it's an emerging pattern or whether it's a completed pattern. And this is the formed pattern. So the price already traded below the neckline, and that's a form of a completed pattern. And this is another one, is whether it's forming, it's an emerging pattern, because the pattern is going to complete if you look at it at the bottom, there is a gray area, and that's when the pattern is going to be complete. So when I'm plotting it, these are automatically plotted for me, and it's telling me that while it's still forming and the pattern completion zone is at that point, until then it's still emerging. So this is what happened here. This is Eli Lilly, where the pattern actually completed, and then it's actually reversed and of course traded at higher. So the difference is in the state of the pattern, whether it's emerging or whether it's completed. There's a couple of more patterns here. I'll skip this. And then let's go and look at the pattern analysis. So all of it I put together into my framework of testing the pattern. So once I detect this pattern, it automatically pulls up its stats, and then it says, well, these are the fundamentals of the patterns, and then next is it talks about the pattern analysis. Pattern analysis is actually generic analysis, but it also looks at the trend analysis and tells the pattern what you're looking at it is what was its long and medium term and short term trends are, and what is its target trend maybe. So it ranks it between 1 to 10, and then what is the general pattern statistics historically. So it says, when patterns, this particular pattern completes about 63% of the time, it also reverses about 62 on what the success and failure ratios. But then it bases these numbers based on a actually pattern ranking. The ranking is the location, trend, and symmetry, and the integrity rate, and the ones I talked about, the components. It actually looks at each of them, and then it shows you in this graphic form, and then it tells you what is the combined rank of it. And then for you to make a decision to say, well, would I trade this pattern or not? That type of thing. You can just by looking at this combined rank of it. And that's what is the pattern, my analysis is. Well, so now I presented what type of a pattern components I use it. The next is the market context. In fact, I presented, I think in March, I'm thinking it's March of 2013 on BMT. And the entire presentation is about market context and what type of tools I use it. I use this moving averages and pivots and gaps and that type of patterns. And the next is I use something called combined market internals, which is also discussed quite extensively in the presentation. You guys can take a look at it. And this is purely an intraday indicator, which I use it to find out what is the general market trend is. So if I'm trading a bullish pattern, I want this to be in a green condition. So that means that the market internals are actually agreeing with my pattern structure. Then I also have a trend-based indicators like something called a super bars, which I plot them, actually superimpose them on the chart itself, and that tells me if I have a bullish pattern, then I must be seeing the trend. The underlying trend must be bullish, or opposite. If it's a bearish, then I must be seeing the bearish type of trend. And the last one is the volatility, because especially like for example, if you look at it today, market volatility, and it was kind of was down, but the market volatility was, if you look at it quite a bit, it's more than 65 or above. So that means that anytime the market is above 50 and above, then I'm actually trying to trade. I'm trying to not to take any new positions. And if it's anything above 100, then I completely exit out of the trade. So I look at this market volatility. This is an intraday indicator for me to actually find out and tell me when to trade it and when to exit out of the trades. So these are the market context tools. So the next is that this is actually the results page of it, what I call it the success and failure. So first is what I want to present is, let's talk about a little bit from the field. This is going to be a lot more bigger research I'm currently doing, and I'm actually going to be publishing a book on field chart patterns, and that's going to probably come out in the next year sometime. But there are 4 types of failures in the chart patterns. One is a trap. Trap is when the price actually reverses from you're pretty much you're waiting for a bullish breakout to happen. The price comes to a certain point, certain like a buy point, and then you think that it's going to break out, and then quickly it reverses it. And it happens quite a bit of the times, and that's what is called a sudden reversal, and that's called a trap. And the whipsaw happens is especially like today, sort of in a pretty much volatile environment. It happens in the first half an hour of the trading too, and the last half an hour of trading. Most of the price action is whippy and chaotic. So if you're not careful, then those times, you may be right with the setup, but you get whipsawed and you actually get out of the trade because you have a stop loss hit. So that also becomes a failure. The third one is a fake out. Fake out is a deceptive price progression happens. So this happens quite a bit in the markets, especially like, people are looking at it and saying, well, the previous support is here, so let's go and, run it up to that price and probably collect all the, buys and sells from that point, and then actually completely take everybody from the markets. And those kind of things also happen in the markets, and then that's kind of very deceptive price progression. And the last one is the trend reversal. Trend reversals are system trend corruption. That means most of the time trend reversals can be spotted using some type of a divergence indicators like a CCI or a RSI. I don't use them personally, but you can actually find those type of indicators to see some type of divergence. So that way you know that the price is making higher highs, but the trend is actually showing lower lows, and that itself is signaling that the trend probably is going to reverse it. So it's a very systematic trend is getting corrupted. So some of the quick examples of this are here. If you look at it, this is actually one of my trade. Unfortunately, I did take the trade, and then I found out that and I wasn't here to actually look at it, but the trade ended up in a loss. And this is one of the trap. It's basically the price came up to that neckline, and I actually got into the trade because I knew that the following days I will not be in front of the computer. So I actually got into the trade a couple of days ahead of it, thinking that everything is great about this and it's going to probably move up, go into the bullish condition. So this is what happened. It actually, once I got into the trade, then quickly it reversed from there, and then it fell, and that's what is called a failure. And then most of these failures you can spot it, especially in head and shoulders pattern. The failure occurs when the price starts trading below the right side shoulders high, or in this case low, because this is an inverse head and shoulder condition. So once that happens, you know that that's a failure. Here is another one, which is, of course, I wasn't in a trade this one, but I was looking at this ABC pattern. I was pretty confident that this is actually going to move up. This is a copper trade, but it's actually ended up in I didn't have any trade, but that's how it actually failed. So some of the systematic failures happen, or in triangles. This is a systematic triangle failure where when the price trades below the previous pivot point. Like for example, in this case, this is a bullish symmetric triangle because the previous trend is uptrend. So you expect it to break out of the 5 and then move up. But when the price starts trading below 4, that's where the failure actually occurs. So this is one of the example of it, how the things happen. And this is what my research is. I'll be showing this in and this is another rectangular failure. So now we know about how the failures occur. Now let's look at it. What is the success based on? So because as I said, my interest is to find out each pattern success and failure ratios. I'm looking at historically. So what I did was I studied the success based on 3 primary categories. First is the pattern selection. The selection pattern is which is quite important, using the sizes and the locations and the what type of a structure does it have, type of thing. That's what all went into this model of it. The next is the market context. Market context is, I think I talked about a few tools. I use a certain type of pivots and certain type of moving averages, and then certain market internals to compute whether the pattern is a valid pattern for me to trade or not. So that's all is part of the presentation which I was doing before. And the last one is the execution of it. Execution is, how do I consider a pattern a success or failure? Is basically I want at least a minimum of a 50% of the target range to be, it must reach 50% of its target range for me to say that, it's a successful pattern. And then, whether the pattern reaches the next target zone. And, so then I have multiple target zones. Within that, I actually have a various ways of measuring this execution level. And I never added any kind of a position to it. I took one single position and then I said, okay, how is it going to trade it? And that's how I actually tested it. So my test basis is based on, my pattern selection is based on, I look for these balanced patterns. The balanced patterns are, I was looking for a symmetry of at least a 0.65 or above, and I was also looking for a integrity rate of, again, this is also at least a 0.6 or above. And then they are again supported by the strong market context, and then it has a pretty much, the underlying trend is saying whether it's bullish or bearish type of any kind of a pattern which I'm checking it. So now, for example, I'll give you this example here. It's called a bullish cipher pattern. And in this case, the first one is, I wanted to make sure, I wanted to test only the patterns which have completed. I don't want to trade patterns which are emerging, so I wanted to wait until they completed and then reverse them. So if you look at it at the number 1 level, what we see is the completion. And the second is it must trigger above that EL, and that's what I call it the reversal, and it reversed and it gave me an entry level. And the third one is, whether it reached at least a 50% or at least the first target range. And the target zone in this case is the 62 to 79%, and that's where it reached the target. So this is what I'm going to use this type of analysis. These are the components I'll be using it to test my patterns. So what I did was I went and studied about 890 stocks. These are stocks, ETFs, FX, and futures, and I studied them primarily in 2 different time frames. One is, of course, I studied in a daily itself, and the second one is I studied in a 5-minute chart. So it's kind of covers the both type of time frames. Each of the pattern takes a really long time to test it, because I'm looking at almost like I looked at 36 months of data, including the 5-minute chart data and the daily data for 36 months of it. So because of that reason, then 890 instruments. So for each pattern, I wanted to find out what are the number of patterns which I can use it to test it first. So that goes into my component analysis. So in this 890 patterns, so in the 890 instruments, in 2 different time frames, 5 minutes and daily of 36-month data, I found 7,091 ABC bullish patterns. And from this, I used something called a size 8. Remember I talked about size between 3 to 7. And then, so now I started measuring the component analysis. So then each and every pattern, I looked at what was its prior trend and what's its pattern trend and what's the trend after. And that's what is called a trend strength. And what is the trend score? and then I also looked at its symmetry type of thing. And then what is its location stability? Location stability is whether it's forming in extreme conditions or whether it's forming within the trend itself. And then what is its total overall integrity type of stuff. So this is how I actually measured it for every single pattern. So then not only I took this, here I'm presenting these 6 patterns, but I also, these are the 6 ones I went into and studied this component analysis. So the goal is to measure and say what is its combined score. Because in the components I wanted to measure what is its combined score. So now I took the combined score of these patterns is at the bottom line, the last line, what you're seeing, it is 67.1 for the ABC bullish pattern, 58.5 for the bearish. So these are the numbers I came out with, and this is what is the component analysis. So now based on this combined score of which has a greater than 6, what I wanted to do is I actually wanted to measure. Now I wanted to use it into my execution model. The execution model is, well, the percentage of the patterns which completed, from these patterns I took them and then I said, what percentage of these patterns actually triggered my entries? Right? So if you look at it, the reversal is the one, that's what it's telling, that these are the ones, this many, the 71% of that patterns out of this, which has got this combined score of a 6 or above, which have reversed from 71 and above. So I use some type of an entry algorithm. So I have a couple of entry algorithms to enter into the markets. And then my goal is to see how many of these patterns which actually reach my first target. My first target is 62 to 79%, and the second target is 127 to 162% of the range, and the third target is 227 to 262, which is kind of rare, but it does happen. So then based on the structure, I actually built SF. SF is the success and failure ratios. So that's how I actually computed for every single pattern, and in fact I'm testing it in a lot more time frames and also a lot more patterns, because my goal is to test pretty much the patterns which at least I wanted, whatever I wanted to trade. So this is my first cut of it. So the success and failure ratios which are present here are, for example, ABC bullish patterns have a 67.1%, whereas the bearish here only has a 54%. And then, so this is the analysis for the last 36 months. If you look at it, the real statistics, people say, hey, even 36 months is not enough, which I agree. In fact, probably I should be testing last 10 years of it. But even this 36 months itself of testing itself, it probably took me almost a year for me to get to this test bed of it. So I will be testing it, a lot more of it and a lot more analysis, but this is my first analysis of it. And then now I wanted to rank patterns based on the success and failure ratios, and that is my success and failure ratio ranking. This is what is my final results. Are the best pattern to trade according to this research is the bullish cipher pattern, which is it's got a 0.72, which is the highest, and which I found this in March of 2014, and since then it is exactly right. And in fact, this is one of my best pattern to trade it. And I actually, every time I look at the cipher patterns, I get quite excited because I know the success is pretty high. I also trade ABC bullish patterns, which is only 0.67, which is the 4th in ranking, but I still like it because that's what I've been trading it for the past 10 years or so. So these are the 6 ranks I presented. This is the highest success and failure ratios. So that's my presentation for the success and failure ratios. So this is what I'm going to do is I'm going to have a little bit of a shameless I guess, self-promotion here. This is my new book, which is going to be coming out in December 2014. Actually, the book is mostly done. I'm actually sending out to some of the people who want to probably correct it and read it. What I'm trying to do is I'm trying to come out with 20 of my best trading setups, which I identify them for both intraday and swing trading setups, and these are pattern-based. And then it shows you not only the entries and stops and targets, but it also talks from the market context tools. In my first book, I didn't really present too many of the market context tools, and here I present each and every setup based on what type of market context tools I used it and how they work, and why I call them the best. So that's what is going to come out in December of 2014. And the next is, of course, the TradeStation tools. I build all of this in TradeStations, and I actually build all these tools from a trader's perspective. I have over like all this probably 30 to 40 patterns already built, but primarily I look at from a trader's perspective on how does it help a trader, and how does it help me first, because that's how I actually use it to trade it. So ABCs, I spend so much time in it and actually computing it and finding the best algorithms for it, because I wanted to know how traders can use this information type of thing. And so every one of my indicators is built from the trader's perspective. And all the patterns are recognized without absolutely any delays. That means in a real time, it will show you as the pattern is forming at this instant. And they work in all time frames, and every pattern must show entries and stops and targets, and they all show without any delays. And most of them have a time projection. Some of them are time projections are useless, but some of them, especially intraday, but I definitely wanted them end of day. And then I have a radar screen and scanner components. And they're all completely fully customizable. When my pattern analysis is done, it's going to be part of these indicators. So that's the reason I kind of grayed it out at this point. But eventually, pattern analysis is going to be part of each of these pattern structures. So they're also built in a radar screen and also for the scanners too. I have quite a few videos on the YouTube or under my ID called as Suri Notes. You guys can see it in the Suri tools, and there's lots of other ones if you have not seen it already. So most of my pattern recognitions are, quite a bit of their built with the C# and C++ DLLs. I think, my next phase of it is I'm actually going to be putting into different platforms. I know a lot of people ask me for Ninja and other platforms, and I'm currently getting onto that point of it. I think most of these platforms are stable right now, and I'm actually able to easily port it. So that's actually my next phase of actually working on the projects. So that's my presentation. So if you're okay, guys, I guess if you're okay, Mike, then I will probably go ahead and start with the quiz. Just tell me if it's okay, Mike.
Yeah, we can do quiz first, and then we can do the Q&A after that, because I always like the Q&A. It's my favorite part. All right, so before we get started, guys, I'm going to ask for your BMT username if you're one of the 5 winners, and I will get in touch with you as soon as the webinar is over. I'll ask for your address. I'll ask for your autograph request to send to Suri. So please have your username ready. Okay, and Suri, are you able to see the answers as they come in so you can help me pick the answers?
Yeah, I think that's what I'm trying to see. How do I expand this? Okay, I can undock this. This is from the chat, right?
Yep.
Mike, is it from the chat session? Okay. Okay. So here I have a chat session window separately.
Yeah, not chat, questions. It's called questions. Yep.
Okay.
All right, and we got some answers already up, so just pick the right one there.
Okay, hold on. I can't. First of all, I need to expand this, I guess. Hold on, let me see. I'm unable to see all the answers. Not sure why. It's only one line answers I'm seeing it.
You should be able to undock it and expand it.
The question window itself is like kind of a part of this GoToMeeting window on the right side.
Yeah.
So I want to expand this and.
Yeah, there's an icon to the right that says undock. It's next to the close icon.
Do not display this question and answer. No. I cannot undock it. Questions. Okay, there it is. Let's see. Okay, great. I can see it now. Fine.
Okay.
Thank you. Got it. Okay, sorry.
All right.
Okay, here. Part of your TradeStation. No, I think I'm just going to look at these answers. Okay, which of the numbers are not Fibonacci numbers? So the first person who answered it already is let's see his name is Lawrence. Lawrence C.
Okay, so Lawrence, I need your BMT username, please, and Suri, give us the answer also.
Yeah, okay, I'm just going to give the answer. I think I changed from the presentation, looks like. Okay, so that's the one, 50, 100, and 121. There's a lot of people think that, 50, it's a 50% or 100%, 50% percentages are not numbers, it's Fibonacci numbers. The 50, 100, 121, these are not Fibonacci numbers.
Right.
So Lawrence is right.
And Lawrence, still waiting for your BMT username. All right, so guys, please have that ready. Okay, question 2.
Question 2. Question 2 is, in the following pattern, which legs are tradable legs and why? I want you guys to explain to me why. Is somebody answering it? I don't see any answers.
Yeah, there's a few.
Okay.
Taking a little bit longer. People are typing, I guess. 3 or 4 answers right now.
Yeah. I only see one answer. I don't know why. C, because that is the completion of the ABC pattern. That's actually I would take this answer. If his name's Carl Schmidt.
Okay.
Carl Schmidt?
Yep. So Carl, I need your BMT username. So what was the answer again, Suri?
Okay, I'm actually going to print it down. I already have it here. So in the following pattern, which legs are tradable legs and why? It's actually from C to D. The CD leg, as it is the only trend leg in the ABC pattern. I just wanted to explain to you this pattern. This pattern, in this, the ABC is the pattern, and AB is the trend leg. But you do not know at this point whether it's an ABC or not. So you can't possibly trade an AB leg. The only leg you can trade is the CD leg, which is the trend leg, and that's the only trend leg. And I think Carl answered it.
Okay. Question 3.
Okay, question 3. Is which pattern is considered failed and why? So there's 4 different head and shoulder patterns here. I want you guys to tell me which pattern and then tell me why is it actually a failed pattern.
So you're looking not just for the letter, but also for an explanation as to why.
Yes.
Okay. So to make sure, because I see a lot of people just typing the letters.
You know what, I guess for some, okay. Okay, I think I see one answer already.
Yeah, there's about 10 to 15 answers.
You know, but for some reason I just see 1 or 2.
You're looking.
The first answer is right. In fact, the person who answered his name is Ambrish G. The answer is D. In this, I'll explain to you, and I can actually show you the answer too.
All right, so Ambrish, I need your BMT username. Okay, I got it.
So here the answers are like this. The first A is actually not completed, so we're not even considered to it tradable yet, right? A is not tradable. And the B is actually still continuing. I know it came back above the neckline, but it's still continuing. So it's not a completed pattern yet. And the C is also still continuing, so it's not a failure. The D is the only one which is failure because it has not reached the 50% of its target level, and then it reversed. Not only it's reversed, it started trading above the high of the right shoulder's high, and that's the reason it's actually considered to be a failed pattern. So D is the right answer.
Okay, question 4.
Okay, question 4. There are 6 factors part of the trader's blueprint. The ones I presented, my blueprint there. If you guys can list any 3 of them.
Okay, got some answers.
Okay, but I don't.
Make sure that you're sorting by timestamp, Suri, because there's several answers already.
Okay, good. I see. Well, yes, this is the first person who answered it correct. Henry Brewer. Sorry if I'm mispronouncing it. Henry Brewer.
Okay, I need your username, please, Henry. So what was the answer, Suri?
These are the 6. I'm going to show it to you. These are the 6. Trading plan, pattern detection, validity, market context, execution, and management. In that particular order. You have to, you can replace the pattern detection with anything, whatever you are trying to do. But these are the 6 factors everybody must have it part of their blueprint.
Okay.
Fantastic. And
so
then,
last question, number 5.
Question number 5. And this particular question, I myself did not know the answer. So I'm going to ask Mike to answer.
Okay.
Try to look for it. Mike, you had to.
Yeah, I'll do it. Wow, nobody's got it right so far. There we go. All right, so Thomas G, I need your BMT username. So yeah, the forum was started June 2009, guys. June 2009. Yep.
See, I left it blank. I did not know. All right, thank you. So that's the end of my presentation. So what I would do is, Mike, did you get the answer? Sorry,
yeah. Yeah, I got everybody's info. So, guys, I'll be in touch with you in a few minutes once we're done, and I'll get your info to get the books to you. But let's go ahead and do Q&A for a few minutes. Yeah.
Yes. The Q&A is the first thing is I wanted to give a for until middle of November for any ELD license. If you guys are interested, I'll give you $100 off. Please let me know that you attended the BMT presentation. So and just tell me what ELD and you can get $100 off. Okay. And now I'll take questions. And this is my contact information. surinotes@gmail.com is my email. And of course, you guys probably know my website already. The trade station and the Twitter, you can contact me many ways. So now I'll take all of your questions.
Okay. All right, so let's see. So guys, go ahead and type your question if you have some. So I have a couple questions for you, Suri. Okay. So when we talk about the success and failure ratios, do you break those out so that we can look at them independently within bull or bear markets, or does it matter? Like ABC bullish pattern, is that always going to be more successful in a bull market, or is that not really the case?
Oh, no. I actually looked at it. I looked at the market conditions. 36 months is, to be honestly, not enough, but I will be eventually maybe able to go back like 10, 12 years of data and find out. But this is my like a prototype of kind of a sample test frame. But I do separate bull markets and bear markets, and that's the reason when I'm detecting a bullish pattern, and it has to go within the market conditions, market context. Market context tells me that this is the best pattern to trade in this condition. So let's say suppose, if I find a bullish pattern in a, let's say, bearish market during, let's say, 2008 to 2010, let's say, during that time, most of the bullish patterns, they may have a greater success-failure ratios, but they fail. Because it doesn't matter what you do, most of the bullish patterns fail. So I actually look into those kind of conditions and then look at those combined ratios, which are at least a 0.6 or above, or then only I took that into account and then looked at it and saying, okay, how many of them actually completed type of thing. I do separate what is the bullish ratio and what's the bearish ratio for each pattern.
Okay, but just I want to make sure I understand. So do you think that they do, what's the word I'm looking for? They have different characteristics depending on the type of market? I mean, here's my question. Some people say that in bull markets that, bearish moves happen more quickly, for example. So do you find that just because it's a bullish market that bearish patterns overall don't perform as well, or is that not really the case?
In a bullish markets, most of the bearish patterns do not work. The bearish patterns work only in exhaustion conditions. Let's say suppose you have a pattern, take a kind of an apple kind of a condition, right? For example, I've been looking for apples. It's been showing a bearish crab pattern for the past 4 to 6 months. Okay, so since that time I've been thinking that it's going to fall, but it's such a bull market that nothing has happened, and every time you think that it's going to turn around, it's not. So that means most of the bearish patterns in the bull markets are actually marginally succeeding. There's always a case that price actually reaches a certain point and then reverses from there. But in a general terms, the bullish patterns work more in a bull markets and bearish patterns work more in the bearish markets. But so that's the reason when you're trying to put a trade, you need to be very careful. Basically, you're almost doing some type of a counter trend move with your pattern, right? So like, I think I may have quite a few examples with that. Let me actually show you quickly one of the, if I can, I believe. See, here is the one. This is the one which I've been looking at it for a long time. This is the deep bearish crab, but this has been deep bearish crab since July of 2014. Right? And now it's almost November, and the price is, it went to 103. Since then, I'm thinking that it's going to fall to this $90 or even lower, right? Even when they came out with their iPhone 6 and everything, every time it came out the negative, it never went. Now it's already trading about 106 is the price.
Right.
So you can go back and look at these patterns. This is so you can actually follow this history of these patterns on my website and then see how these bearish patterns is not going to work. But then there are certain patterns which are reversal patterns, especially like head and shoulders kind of patterns. And they, let's see if I can show you this one. Yeah, this is the one which actually worked. Share this one. And this worked incredibly well, and in fact it fell all the way below to this, I think, $84 level too. So this is the one which is actually one of my trade which I traded it, not because of it's a bearish trend, but because it broke through this neckline. And then I said, okay, well, it also has a bearish crab, but it also actually broke to the neckline, and that's the reason I actually traded this pattern. It fell all the way to much lower than this price.
So, for example, on an ABC bullish pattern or something, or an ABC bearish pattern on Apple, if it fails, once it fails, do you look at that as an opportunity to get long, or do you just disregard and wait for the next pattern?
No, I tell you what, so far the only failures I actually successfully trade are patterns like head and shoulder patterns, right, or any kind of a triangular breakout patterns. Sometimes when they fail, because what I think is, it's, for example, Apple's condition, right? It's primarily driven by their red links and their market news kind of thing. It's not driven by the pattern, because I'm not going to oppose a pattern. I'm not going to go and counter trend a pattern by itself. The way how I trade it is, I actually trade patterns in the same direction of what it's showing. So if a head and shoulder breaks down, then I say, well, it's a bearish trend, then I'm going to short this stock. That's how I trade it. If it's a bullish trend, I'm going to go long on this trend. But I'm not going to oppose this trend until I know that there is a condition or there's a pattern which is supporting that pattern.
Okay. All right. Sebi's asking, how much do your products cost on your website?
Well, most of the products, if you go to my website, you can click on the products and you can click on any of these levels, and then you will see the prices right there. It's quoted, and these are like a one-time licenses, and the licenses are given for lifetime. So pretty much it's only one-time fee. You can click on any of these indicators, and then you will know what the price is.
Stacy wants to know, does any of this change when looking at Forex or currencies? Or, I mean, you pretty much talked about equities, but what about futures, Forex?
I have used the Forex FX markets also when I tested these patterns. It's across the ETFs, futures, Forex markets, and I've used quite a bit of these things to talk about it. Let me quickly go to that slide and show you. Let's see. Yeah, here. I have, out of this 890 stocks, ETFs, FX, and futures, I use them. So that means I've tested it on all different four kind of categories. So, but I've tested it in daily and 5 minutes, and then, of course, as I said, each of them takes longer time for me to test.
Okay, so to clarify, Stacy says did any of them stand out as a, as a subgroup? Like, were Forex, did they perform differently, I guess, than the stocks is what's being asked?
Well, I am not I have traded Forex a long time ago. I have never traded recently. But one definite thing I noticed is there's two patterns which are still, I trade them, pretty much. And the two patterns really work well even in FX markets. Is the first pattern, which has got the highest ratio, is the bullish cipher patterns. And the cipher itself is, if you would have probably about a year or a year and a half ago, I have never heard of the pattern myself. But somebody sent me the details of how the pattern is constructed, and they said, hey, this is the cipher. Then I went in and tested it. I've used the pattern and I knew the structure, but I didn't know the name to it. So then I went and started testing it, and it incredibly has a great success not only in the equities, but it also has a great success in FX. And one thing is definitely hands down, ABCs are with the market context is probably the best pattern to trade it. It's also probably one of the simplest pattern to trade it across the board. It doesn't matter stocks, ETFs, FX, and all types of risk. So that's actually, I think, 10 years ago, I discovered it and I made that as my absolute bread and butter pattern, and I'm glad I made it because I think that is the best.
Right. So let me ask you about the success and failure ratio again. How do you consider the impact of risk versus reward when you're looking at that metric? Like, if pattern A has a 1-to-1 risk reward, or pattern B has a 2 reward for every 1 risk, do you take these things into consideration? Do you just
I think the idea is this. Every pattern, like for example, just to focus on this particular slide. You're seeing this, right? This slide. In this, let's say the ABC. Let's look at this, the first column, right? First column, I found all these patterns. Let's say I don't know, 7,000 patterns on the ABC bullish, right? Of which what I'm saying is the PCZ is the pattern completion zone. So the first thing is I wanted to test what percentage of the patterns actually reach this pattern completion zone, because I don't want to take the patterns which are still forming. So the 64% of the patterns which are completed that zone which I expected. For example, take ABC pattern, right? In the ABC pattern, I consider between 50 to 62% is the minimum pattern completion zone. The price must reach minimum that range for me to say that this is an ABC for me to test it. Okay? And the next is the reversal. So just because pattern reach that PCZ zone, it doesn't mean that it's going to reverse and give you an entry kind of a method. So the reversal must happen. So I have a way of plotting this entry levels. Entry levels means the level which actually reverses, starts at C and then it starts reversing it. So out of the 64% of the patterns which completed it, from that, the 71% of the patterns actually gave me the EL level. So now answering to your question, so what happens is once its entry is hit, right, now we have an entry and we have a stop and then there's a target. So the target one is 62 to 79% of the AB leg. So that's the leg which I'm saying, okay, this is what I consider it as a reaching the target. So that's what I call it a success, 100% success, right? But whereas there is the stop level is right below the C level. At that C level, if the price actually reverses and trades below the C level, now I know that that pattern is actually a failed pattern. That means because you're already in a trade and your stop is hit based on your own analysis. Right? Okay. So that pattern is considered to be the failure. So if you look at it in this, what it's saying is the ABC patterns, but you also need to understand that these are the best patterns which I'm picking them, right? Because in this, I pick the patterns based on this component analysis, and then I'm saying I'm only going to, out of the 7,091 patterns which I found it in the last 36 months, I'm only picking the patterns which have got this combined score of a greater than 60% or 0.6 or 6. So that means I only took 67% of the 7,091. So these are all already the best of the patterns to start with.
Okay.
Right? And from that, I'm saying how many of them actually reach this TCZ zone and how many of them actually reversed it. And now once it's reversed it, now I'm looking at and saying how many of them actually reach the target 1, target 2, target 3%, and how many of them failed.
Okay.
So that's how I actually came to success and failure ratio stuff.
Here's a question from Dimitri. He says, what conditions or indicators are you looking at in order to consider market direction? For example, one can say we're bullish or bearish conditions.
The underlying market conditions uses quite a few of the theories, because there's a trend indicators which of course a lot of people experiment with it, and I also experiment with it quite a bit. First of all, I truly believe in just the price itself. So let's say suppose, I will give you just some basic information, is that let's say suppose that the prices are contracting and prices are expanding, and that's happening for a reason. Right. So let's just suppose, if the volatility of the price is, it's moving up and moving down extensively, now the volatility is changing. So those are the ones which should tell you what may happen in the future. So your trend of the pattern must consider these price ranges and these volatility ratios. So that's what I actually use it into my, what I call it a super trend, which is the underlying trend indicator. And then even within that, then you also need to look at and say, whether the price is happening above certain period moving average. Some people say 50 period moving average is great. So let's just suppose all the bullish action is happening above 50 period or 200 period moving averages, then you tend to believe that, hey, this is the bullish condition. Institutions use 200 period moving average absolutely every single day. They're not stupid. There's a reason for it, because 200 period moving average works phenomenally well, and that's the reason they use that. And every time the price crosses above, there's a lot of institutions are coming and buying that particular stock, and they tend to work over a period of time, and that's the reason they use it, and that's what these are called trend indicators built upon. And I use the similar type of trend indicators too.
Okay. Suri, I have a question about the testing methodology itself. I mean, can you just give us I'm sure it could take an entire series of webinars to go into detail, but can you give us a high-level overview of how you're testing all of this stuff?
Oh, first of all, I tested everything in TradeStation, and then of course I also use a little bit of Excel to get these numbers straight and that type of thing. Again, using TradeStation myself. But every single pattern which I presented here, or I have it, all of them are automatically detected. Not only automatically detected, I showed you my test bed. They not only they pull the pattern, but they also analyze the pattern from there, and then it shows you what's happening at those location levels, and everything is computed. I wrote all these modules into TradeStation itself, so they tell me what is the symmetry ratios are. So I use this to go through every single pattern and then say, okay, what are the patterns I can test it. So this is completely automated type of thing, and then I took the results and then of course use Excel to present it type of thing. But that's how I'm using it.
So speaking of automation, I mean, I'm just kind of curious, how do you, I mean, I know you have, I'm trying to figure out how to say this. I know you have like scanners and all this stuff, but how much of it is like fully hands-off, in and out, you don't see it, you don't approve it, it just does it by the system, versus how much of it maybe, gets filtered your direction and then you look at it yourself and you decide what to do?
Right, that's a pretty good percent. I don't think it's a 100% automated yet. I would say I'm getting there, because that's the eventual dream of everything is getting there. But I am actually about 80 to 85% of it is automated systems. Basically, I still like to monitor, I still like to, tweak, and I still like to, change positions and that type of thing. But I am not a 100% automated yet, but I am getting there to it. And I think eventually I'll get there. It also based on up until a couple of years ago, it was not even possible. And most of the platforms are retail platforms, because TradeStation, I used to use TradeStation, and it wasn't stable for quite some time, but then now it's quite stable. I think, you could do 100% automation in TradeStation itself, because your execution is not just your algorithm and your trading, but it's also what goes on the server side. how the orders are placed and how server treats your entries and your stops and your targets. So there's a lot goes on the other side too. So those are all need to be come together, and I think now I'm pretty confident I can do that eventually.
Okay, so I'm just a little bit surprised that you're doing all this, mostly in TradeStation. I mean, at least the scanning and presumably the automation side for the entries and exits, because I think I told you last year, I'm working on my own platform. It's in R, it's in Python. It scans about, 5,500 tickers in real time. And I mean, you can't do that with TradeStation, right?
I mean, absolutely not. But that's the reason when I'm trading it, I have a very, first of all, intraday trading is purely based on only E-mini futures.
Okay.
I do not trade equities intraday at all.
I see.
I trade equities and options purely from options. I have positions all the way to 6 months to 8 month positions type of thing. Mm-hmm. So I don't have any, but equities, I trade from a daily perspective. A daily or kind of probably goes for week to 2 weeks max. But but only E-mini futures, I'm trading that too. I trade 3 of them. S&P, NASDAQ, and YM,
right.
And then I trade some gold futures and that type of thing. But those are the very limited number of futures. That itself, it gives you plenty of headache.
So, so is it kind of like an end of day type thing where you download the day's chart and then you scan or do your analysis?
I'm doing this all day, but the intraday is pretty much based on the tick data and minute data kind of thing, trading. But I'm talking
for the equities, right?
For equities, it's absolutely. I probably don't even look at the minute data.
Right. Got it.
For me also, it kind of defeats the purpose. In my book, if you are right with equities with a position call, let's say, right, you might as well wait for 3 to 6 days and get a bigger chunk of the position than, day trade and make 20 cents or 30 cents out of the position.
Okay.
And so that's how I look at it. That for me, for my type of trading. So that's the reason I think equities trading daily makes sense.
Okay. Well, we're coming up on an hour and a half, so Suri, I think this is a great time to stop. Can you throw up your contact slide one more time, and I'll say if anybody has any other questions that they did not have a chance to ask, they can reach you on your website. I think it's surinotes.com. Yes. And remind me, what's your email address?
Let me show you that quickly. I'm just going to point out. There. Very get to the point. I know there is a there.
Yeah. Okay, surinotes@gmail.com and surinotes.com. Okay, great. All right, well, Suri, I really appreciate it. I like the Q&A part a lot, and I think one of these days maybe we can do like an extended Q&A session.
Absolutely. Yeah, let's do that. Thank you, guys. Thanks for the opportunity. Thanks all of you for attending it. Please, if you have any questions, do send me an email again. And thank you, Mike. Thanks for the opportunity.
All right. Thanks, guys. See everybody later. Bye.
Thank you. Take care. Bye-bye.